Peter Westaway is Chief European Economist at Nomura, joins me in the studio now. Peter, we were just saying that if you look at the markets, what was happening last week, you'd think that we were actually making some tangible progress towards resolving some of these issues. But if you look at the outcome of the meeting in Poland over the weekend, not so.
Yes, slightly surprising that the markets were building up expectations for that ECOFIN meeting over the weekend. I think the fact that Tim Geithner went across as well, there was a lot of hope that they may be able to make some progress on beefing up the EFSF so that that could be a little bit more powerful in future. And the fact that that was very much calmed down, you know, expectations of anything on that was calmed down.
Was there any point in Geithner being there in the end? Because as you say, that it had heightened expectations that anticipation that something tangible would emerge, possibly something in the form of a European version of the US-style loan facility, to kind of ring-fence these toxic assets of the banks. But actually, we had nothing of the sort, and it didn't go down well, his comments, with some elements, did it?
No, definitely not. I mean, the point of him going would be very much to demonstrate solidarity following up on the joint liquidity announcement last week. But if in the end all you get is acrimony, which is what's come out of it, it doesn't seem to have been very helpful at all, and it's just made people even more pessimistic.
Yeah, now today we do get a conference call, don't we, between the Troika and the Greek finance minister. What do you think the Troika will demand in return for releasing the next €8 billion tranche of aid to Greece?
Well, they've provided a shopping list. I mean, I'm not going to go through the details here. I mean, we heard about a property tax, which they're now saying maybe isn't going to yield as much as they first thought. But there's a whole shopping list. A lot of it revolves around expenditure cuts. And these are all going to be very painful for Greece. But I think in the end, they're going to get enough agreement on that the Troika will allow the money to be dispersed.
And even once that money is dispersed, given that everyone right now seems to be revising down their growth forecasts, it doesn't look as though we're not going to see any real growth in Greece, are we? The consensus is that we will see continued recession. So effectively, even if they get this aid money, they're just postponing dealing with these problems.
Yeah, I mean, it's awkward for Greece because when Greece turns out worse, they then have to do even deeper cuts. I mean, you compare that to a situation like the UK, where when growth turns out worse, because the UK's austerity is conditioned on cyclically adjusted deficits, they don't have to do more austerity. So it's sort of heaping worse news on top. But, yeah.
What happens if Greece doesn't get the next tranche? Is that a scenario that you're looking at all? There have been reports that they would effectively run out of money in, say, the second week of October. Does that make the default scenario that much more imminent?
Yeah, I mean, if the Troika decided to pull the plug, and let's face it, a lot of policymakers have been sabre-rattling, they've been threatening this. The real question is, would they really do it?
Yeah.
And I think the problem is, if they did, the consequences for Greece would just be really, really serious. I mean, the government would effectively run out of money. They'd probably have to stop paying some of the public sector workers. The question arises as to what the ECB would do, because at the moment the Greek banks are effectively on life support from the ECB. So if the ECB were to withdraw support there, the Greek economy would effectively go into meltdown. And that's why in the end we think, for all the sabre-rattling, they can't let it happen, because once it happens for Greece, I mean, in a perfect world, you might say, let's just cut Greece off from the monetary union and move on. The problem is, it wouldn't be as simple as that. If Greece were to leave, then the cat would be out the bag.
There wouldn't be any way of ring-fencing Greece so that it doesn't spread to Italy and Spain, because right now it seems as though the situation as it is now, we're already seeing borrowing costs rising for the likes of Spain and Italy, so that's not doing any good either.
They have to knock that possibility completely on the head, and that's why trying to improve the EFSF, which is their main vehicle for keeping those yields down in Italy, matters so much. And if we are going to get a really serious downturn in Europe, it's going to happen because of speculation about Italy. That's where the big losses in the banking sector would happen.
And you said much of that is dependent on the Eurozone bailout fund, and of course national parliaments have been dragging their feet over ratifying the agreement that was made in July to expand the remit of the EFSF.
Yeah, I mean, this is part of the problem, that people are looking for a big policy statement from the euro area policymakers, but in a way they did it in July, but they just haven't implemented it yet. And so it now looks as if it could be, early October or something like that. And I think even once it gets ratified, it's still not a done deal that it's going to work. But I think we need to get to that position where it's up and running. Then we can really see.
Why is it not a done deal that it's necessarily going to work?
It's not a done deal because at the end of the day, the 440 billion just isn't big enough to provide a credible backstop for a country the size of Italy and perhaps Spain as well.
Should they then just focus on the banks?
Well, I mean, part of the settlement of the EFSF is to inject capital into the bank. So I think for the weak periphery countries, that's in hand. But again, it's all conditional on the EFSF being ticked up. But it's not just the weak periphery banks. I mean, some of the banks in France, Belgium, Germany need recapitalisation as well. That's not going to depend on the EFSF. That's going to need national governments to step up. And again, they've been dragging their feet on that. That needs to happen too.
All right, thanks very much. Peter Westaway, Chief European Economist at Nomura International. Good to talk to you this morning.